What is a state tax lien? So welcome back. Today's episode is a discussion on what is a state tax lien. Now, just so there's no confusion, this episode is going to refer to tax lien certificates which apply to real estate property when the property owner has failed to pay the property tax. So this is all about property taxes when they haven't paid the state, which they actually do through the county, but there's some confusion there. So I want to make sure you're not confused with just regular state liens. Now, if you live in a state where there's income tax, that means that that state could be filing liens against you for not paying income tax and a whole bunch of other things. This lesson is all about what is a state tax lien. However, I'm just going to answer it in regard to tax lien certificates. I don't want to have a lot of confusion here. Now, there could be a lot of other reasons to have a state tax lien, and I'm not doing that here. Tax lien certificates have been used by local counties for decades, actually for well over 200 years. And really what's going on with a tax lien certificate is simply this. The local county has mandated, actually the state has mandated, that everybody must pay taxes. And when people don't pay their taxes, for example, their property taxes, then the county will issue a default notice and they will start a process of issuing a tax lien certificate. Now, those tax lien certificates are announced on the county website and in the newspaper. Anybody can buy one of those certificates and earn a generous rate of return. For example, if you bought one in Iowa, you could earn 24%. If you bought one in Illinois, you could earn 36%. I live in Florida. We can make up to 18% on a certificate in Florida. You're getting the idea. All right, so the state has mandated everybody has to pay tax on their real estate. All right, so the people didn't pay the tax, so the county issues a tax lien certificate. Anybody can buy it and pay the tax, and now they're going to start earning generous rates of return. All right, when they buy the tax certificate, that starts the clock going, and depending upon the state, sometimes it can be 2 years, sometimes it can be 3 years. That person has to pay their taxes. But there's thousands of these tax certificates that are issued. Now, when I say thousands, I need to make it more specific. In the state of Florida alone, they will issue 1 million tax certificates each year. Think about that. 1 million property owners didn't pay. That means that's 1 million opportunities for you to buy a certificate and start earning money. So you're kind of getting the idea. All right, now half of the states in the United States sell these tax lien certificates. So why are you watching this video? Well, probably because you want to have more freedom to work when you want to work and work on what you want to work on. So I understand that completely. So many people make a lot of money working because they can determine their own hours and they work on what they want, but they might work a lot more hours than they did in a job, but they're working for themselves. So the idea of setting your own hours is really a good thing. So that's why a lot of people become entrepreneurs. Some would become entrepreneurs because they just want to get rich. Other ones want to be famous. Other ones want to work when they want to work. So entrepreneurs, as a rule, they work very hard. They put in long hours, probably much longer hours than they would if they worked for somebody else. But you have to put in a lot if you're going to make it as an entrepreneur. Now, for clarity, today we're talking about tax lien certificates, which is really a legal claim that the county government has against a real estate property. So we're talking about tax lien certificates. I'm not just talking about overall state liens, okay? So the title of our episode today is What is a State Tax Lien? I'm not covering all liens that could happen in a state. I'm only covering tax lien certificates, which are a legal claim that the local government has against the property. All right, now the county will enforce the payment of taxes on real estate. First of all, the legislature sets the rules and said everybody that owns a property must pay property tax. Now that's enforced at the local county level. So the Board of Supervisors and county commissioners, they tell the treasurer, be sure and levy the tax, then try to collect the tax. If you can't collect the tax, then you have to sell a tax lien. So you and I can buy that tax lien, pay the taxes for somebody. Now why would we want to do that? Because depending upon the state, we can earn 16%, 18%, 24% in Iowa, 36% in Illinois. You're getting the idea. We can earn a lot of money. All right, now most tax lien certificates, the property owner will come in and pay. In other words, they'll come in and pay their back taxes and the high interest rate. So 97, 98% of the people will come in and pay the back taxes and the high interest rate. But there'll be a few percent that won't do that. Now, the few percent that don't come in and pay, if you own the certificate, then you can go ahead and use an attorney, go through the legal process, and you can end up owning the property. So for you as a buyer of a tax lien certificate, number one, you now have the state's lien or the county's lien on that property. Okay, so that gives you strength. However, if the person doesn't pay, you can take over the property and sell it for any amount of money you want. So you're either going to get paid or you're going to get the property. So tax lien certificates, only two things can happen. One, you get paid. If you don't get paid, you get the property. It's about as simple as that. Now, it's a simple thing. What is a state tax lien? First of all, it's a lien against the property. It's an encumbrance. It's a weight on the property. In other words, the state is going to make rules to enforce that. Okay, that lien, once it's on the property can't be sold, can't be encumbered, can't be transferred. That lien has to be paid, or whoever owns the lien can end up with the property. So now you're kind of getting the idea. All right, so nationwide, there's over 3,000 counties, and all the counties will either sell tax deeds or tax liens. Now, today we're talking about tax liens. So about half of the states are going to sell tax lien certificates. So that means I'm just talking about real estate. I'm not talking about the overall liens that could be on property. All right, now about half of the states sell tax lien certificates. Anybody can own one of those certificates. They're sold at a public auction, and they have different interest rates in each one of them. All right, they're also sold on the county website. And you also can find out about in the newspaper. All right, so you get the idea. Now, taxes are a serious problem, not only for the county, but for the individual. All right, so you're thinking about the individual to start with. The individual now is in trouble because they're going to lose their property if they don't ultimately pay the tax certificate. But right now, if the tax certificate is sold, nobody kicks them off the property. They can stay there, so it's very benevolent. They leave their people there, but the people are going to have to pay in somewhere around 2 or 3 years. They'll have to pay it depending upon the state. Now, what about the county? Now, the county has a whole bunch of problems at this time because they didn't collect the revenue. And if they don't collect the revenue, what does that mean? Well, how are they going to pay the county employees? How are they going to pay the school teachers? How are they going to pay to fix the roads? What are they going to do about paying the police department and the fire department and the county sheriff? All those bills have to be paid by the county. And generally speaking, county bills are paid from property taxes. In other words, the revenue that's created by the property taxes is what takes care of the county. All right, so property is going to default every day. At least 2 million are going into default every year in the United States. Visualize that. 2 million properties going into default. So this is a big business. So what's happened is the legislature has made rules, and the rules are enforced by the county. And the rule is in every legislature in all 50 states, everybody pays property tax. If you don't pay property tax, half of the states are going to take your property right now. They're going to confiscate it. The other half of the states are going to file a tax lien. All right, now, if you're in a state that has income tax, well, they could have state taxes on income tax. So that means they could file a lien on you. Today, we're only talking about tax defaulted property, and the liens on those properties are called tax lien certificates. All right, so maybe you're an entrepreneur. Well, entrepreneurs don't mind working, so this is kind of a new business. You could learn this. You could make it your business. The treasurer has a big problem. The problem is they haven't got enough money coming in. What are they going to do about it? They want to do something about it right now. So what they do in half of the states is they just auction the property. They confiscate, they auction it. And when they auction it, they discount it 60, 70, 80%, and then they sell it for 10 or 20 cents on the dollar. That's not what we're talking about today. Today we're talking about those tax liens. All right, now a tax lien is an encumbrance. It's a lien against the property. It means whoever owns that tax lien can do something about it. What can they do about it? They can take the property after they've given due process on that. All right, so would you like to have a slightly used property that you could buy for 10 to 20 cents on the dollar? Then you could resell it on Craigslist if you wanted, or you could sell it on eBay, or you could sell it on Zillow, or you could put signs on it, or you could use Trulia or any one of those things. Well, if you like to get properties for 10 or 20 cents on the dollar, you want to buy tax defaulted property. What we're talking about today is we're talking about what is a state tax lien, and a state tax lien in this case is going to be a tax lien certificate. Altogether different. The people don't get kicked out of the property. You could earn 16, 18, 24% on this certificate. And at the end of the time, if they don't pay you, you will end up with the property. So this episode answered, what is a state tax lien? My name is Ted Thomas. I'll see you on the next video.